the wonderful people at Actions to Wealth, of which I am a very proud trader and have been doing so for, well, it seems like forever now. I'm going to share with you today my method of what I do on Sunday, really, which is pretty much have a look at the last week or the last few days of the week to get a feel for what's going on around the place, mainly from a market sentiment point of view. But certainly there's probably a fundamental issue or two that I need to take notice of as well. Then I'm going to have a look at charts and set up my week, which is primarily a matter of, all right, what looks good for the week and what I'm going to focus on for that particular time frame. So let's dive in, and I will share with you the very first thing I want to do, and that's catch up with last Friday's news events. And they included a whole bunch of things. I'll even go back. Actually, I'll go back for the week because there are a few things happened last week that need our attention or certainly need our scrutiny. First of them was the Bank of Japan, who did nothing and kept their interest rates negative, much to my dismay, because I was anticipating, mainly, I suppose, from commentary and speculation, that the Bank of Japan may give us something that might make the yen rally, and that hasn't happened. And of course, the yen dove straight back into its dive into the abyss, it would seem. GDP figures out with the CAD. I was actually trading the CAD, and I'll share that with you shortly. Didn't have a great week from a news perspective, nor did the Kiwi. Then we had Thursday's news, of course, which was full of action, FOMC statement, which the market didn't really like in terms of strength for the US dollar, and the dollar came off very, very, very much so, and that was followed up on Friday by the NFP result, which forced the dollar even weaker. I think that's a good thing for me because I'm actually a little bit of a bull on the dollar at the moment. Not long term, I can assure you, but at the moment, for the short term, I think that's a reasonable thing for me to be following. So exactly what I am doing. Time will, of course, tell the story as to what happens, and those numbers coming out of the US late last week were not in favor of a strong US dollar. Anyway, I've taken that on board, and now I'm looking forward to the week ahead, which is interesting from an Australian perspective because the interest rate announcement from the RBA, the Reserve Bank of Australia, happens on Tuesday. And if you were in, actually, I'll go back a little bit. We can wake up a little bit later tomorrow morning because the market won't open until an hour later due to daylight saving time shift in America as they come off daylight saving, and that is good news for some. The Aussie cash rates and the RBA statement, of course, will happen on Tuesday. And if you were in Trading Buddies last Monday, Trading Buddies is a show, of course, that Ash and myself do on a Monday. If you're in that show, you would have benefited by the knowledge that I divulged, that the economists in Australia were singing from the trees that the RBA were going to raise interest rates next Tuesday. And now the forecast is for exactly that to happen. So the market throughout last week had a lovely appreciation for the Aussie dollar. And I hope those of you who were in Trading Buddies last week made the most of that opportunity. Whether that's going to cease will, of course, rely entirely on what the RBA do on Tuesday. And if they don't raise interest rates, then I think the Aussie turns around and goes in the opposite direction. But if they do, you're likely to see a strong Aussie dollar continue. That's probably the main thing that I'll be looking at through the week. Pound's interesting as well. It had a reasonable week last week, and I have a little bit of a euro pound, I won't say fetish. No, I won't say fetish, but I did. I've got a little bit of a penchant for that particular pair at the moment, and I'll share that with you as well. Right, so let's get stuck into the charts. And the first one I'm going to show you is indeed the dollar index. And what we saw, and I alluded to earlier, was the Fed announcement, which caused this gap in the market on Wednesday into Thursday. A little bit of a lot of a sell-off, really, but it pulled off its low there into Friday. And of course, the NFP number drove it down. Down to where? To an interesting point. As I've said, been a little bit bullish on the dollar, and there's good reason to think that would be the case. We went into consolidation after this 11 weeks in a row of rallying, and now a fundamental or data release, or two data releases in a row, have pushed this back into this range. That's really interesting for me, because if we get a weak on the dollar this week, then I suspect that we're going to see weakness follow through. I would anticipate that we'll get some rally or some relief from this extraordinary bar last week, maybe back to here, but it will depend entirely how strong that is this week as to what I do next week. What I'm saying also is I don't know what's going to happen next, frankly. We are at our support level from a structural point of view, but we've also come back into that bigger structure, which of course is that rectangle and that box range. So I'm anticipating that we get a relief rally this week. And if that's the case, or that's my bias, then I'll be looking for smaller time frames to trade this back to the top of the range. So, there's around about 60 odd pips available there on a 30-minute time frame. That may work on Tuesday or Wednesday. Don't know that'll happen tomorrow, but we'll see how that pans out. But that will be my bias for the week on the dollar, which of course flips back into everything against it going in the opposite direction. I'll cover that with euro dollar very, very shortly. The next thing I do throughout the week, or throughout a Sunday really, is analyze where I want to be. And I've just given you the dollar perspective. That's where I am with the dollar, expecting a little relief rally. But there are other methods of me getting into a frame of mind or a bias situation for the week ahead, and that includes what I call game changer bars. If you look up key reversal bar on any technical analysis, Wikipedia or Google or wherever you want to look it up, you'll find key reversal bars. And that's what I'm looking for here. Looking for what I call game changer bars. Key reversal bar is one thing, but putting it into context is entirely a different story. And what I attempt to do is look at those key reversal bars and put them into context and see if I agree with the directional bias or not. And if I do, won't necessarily trade that candle or bar, but what I will do is wait for an opportunity to trade with that directional bias. So what is a key reversal bar? Well, very, very briefly, a key reversal bar, if you are looking to go short, is a candle or bar whose high is higher than the previous bar and closes on or near its low. So that's a perfect candidate for that. Closed higher than the previous bar and closed on or near its low. There's another one there, did exactly the same thing. And as you can see, the market sold off. There was another one there that didn't really work so well in the first instance, but you would be still in the trade, obviously, and you picked it up down there. Now we've got another one. And we've got another one at an interesting level. And if I have a look at the bigger picture, which is what I do, and this is where the context comes from, I like to see what I call the big boss in play here in the same direction. What does the big boss mean? Well, the big boss is the dominant chart pattern. Now that could be anything. It could be a trend line. It could be a square. It could be a rectangle. It could be anything, but it's dominating the chart. At the moment, the only thing that I see that's dominating the chart is a range in here. Ultimately, we've come off the high with this big head and shoulders pattern, which we're still under the influence of, in my humble opinion. And that's why every time price tends to go higher, or rallies, it gets knocked over, gets knocked over, gets knocked over. So this may be one of those occurrences. And if I'm honest, this is really not going to come into calculations for me until the RBA statement on Tuesday. You could speculate, of course, that the game changer bar is going to work and Aussie Kiwi is going to go short. With the now forecast of an interest rate rise, that's probably doubtful, although you could say that that's already priced in, given the knowledge that we had in the previous week. So what I'm saying is I want to leave this one alone until after the RBA statement. What I'd prefer to see is the RBA not raise interest rates and price bounce down into here and gave me a lower high, so I could actually trade with that bias, but from a far more reliable or safer entry is probably where I'm going with that one. So Aussie Kiwi, whilst I am keen to get on the right side of it, I need to wait till the RBA decision. Canadian dollar versus the yen on the weekly chart is giving me quite the opposite. It's giving me a big buyer bar, bullish engulfing bar there. I'm actually already in a trade on this one, so I don't need to add to that position. But I do find this very interesting, and I'll go to my analysis chart to show you why that's the case. I've got a few things going on here. Again, I go to the big boss, and the big boss is giving me a hell of a time because it's clearly put in a strong double top sitting here. If I was to look at this from a structural point of view, I would put a line straight down the middle of that, those two highs, and look for price to come down to here in the first instance, there in the second instance, and maybe there in the third. I'm not sure how that works, given the Bank of Japan would have to intervene, or they would have to say something completely the opposite of what they've been saying for the last 100 years. Well, I won't say 100 years, but you know what I'm saying. So unless the Bank of Japan intervene, I can't see that happening. But from a technical perspective, that's exactly what I see. That said, I'm long, right? I'm long CAD yen. The CAD didn't have a great news week last week, to be fair. But this is suggesting that we do buy the CAD. Big boss, as I said, is a little unclear at the moment. Is this the big boss, this big head and shoulders here? Is that still ruling the roost? Let's give that a little bit of assistance. Or is this big base ruling the roost? Since we had a quadruple bottom at the end of the day, and we've had a very, very strong trend ever since. So is this continuing to go? Well, again, I think a lot revolves around the Bank of Japan and its attitude as to whether they will prop the yen up or not. So that one's a little bit tricky in terms of trading at the highs. As I said, I'm already in, so it's not affecting me too much. But I also see, and I'm going a bit tighter for this, the potential, and I'll just pinch that trade line. I see the potential for this to reverse because of the break above this trade line. Hang on, I'll get rid of this one so it doesn't completely confuse us. The break above this trade line, the consolidation above that area, then the very decisive selling bar, and now we've got a decisive buying bar. What that does for me as a contrarian type trader is say, okay, if these blokes don't drive this through the highs, effectively we've got a lower high being made here. And if that's the case, so if X doesn't happen, then Y generally will. And Y becomes a break of this candle and puts us down into this region here. So I'm whilst I'm in this and only just in this trade, I'm not that confident anymore that I've got the direction right. We shall see how that pans out. You can see where my entry was above this bar here. And if I don't get a follow through candle tomorrow, I'm likely to close this trade, even if in a small losing position. So a little bit mixed on CAD versus the yen, but the yen, who isn't mixed with the yen? My goodness me. All right, let's go to the next one. It is euro versus the pound. And as I alluded to earlier, I think this is my favorite of the game changer bars for the week. and it is a very, very strong key reversal bar. Why do I like this so much? Well, it's primarily on the big boss, and the big boss couldn't be clearer to me in that this level that I've isolated here is probably not right. It needs to go a bit higher. But you can see every time it gets to this, what is it, 91 handle, or 0.91 handle, it just keeps peeling off it and peeling off it and peeling off it. Game changer bar there drove it down. We've had, I can't even count the tops there, but multiple tops, lower high based on that, lower low, lower high, lower low, lower high. But this line here, and I'll go to my analysis chart for this, that red line there is really interesting to me because it's got very, very strong history as resistance, then support and resistance. And now that resistance has been broken and currently being utilized as resistance. The interesting part here is this box range. When I'm looking at box ranges or any structure, I look at the last time we touched the outside or limit of those structures, and that appears to me to be the top side since we put in a lower low, lower high, lower low, and there's that lower high again. That's the monthly chart I'm looking at, right? So I'm expecting downside to fill in that gap, and the weekly chart is giving me exactly what I want to see, and it's a game changer bar to the downside. When I say game changer bar, what it means is key reversal bar I've told you about. But what it really means to me is, and why I express it as a game changer bar, is because it actually changes the game. So the game on the weekly chart, outside of that monthly that we just looked at, is actually bullish. So this bar is changing that bullish momentum and attempting, from bigger picture point of view, to fill in that gap, as I said before. So I agree with the direction. Would I trade this tomorrow? Yes, I would. 100% would. I'd put an entry a fair way underneath there, to be fair. I don't want to be tipped in by spreads or anything like that. And I'd put my stop loss with a little bit of breathing space above that bar there as well. This will be dependent, of course, on whether we get a gap in the market, etc., etc. So Sunday's analysis may not be Monday's reality, given that we could find that there's gaps in the market. Certainly if we gap down, that would be a little bit onerous for me. I'd definitely need to pull back to get in. But if we gapped up, then I would probably place the order, because it gives me that little bit of insurance that if price actually keeps going long, then I won't be taken into the trade. So euro pound, full agreement with the direction. I've been looking for this for quite some time to come back into this box range. There's an inner box range, if you like. We've now come back into that. Wouldn't surprise me to see a little bit of a relief rally here tomorrow or Tuesday. And if that's the case and I get a lower high, I may be able to trade that on a smaller time frame as well. But euro pound definitely up there with my my bias for the week. Euro versus the yen is next. Look, I won't continue on with analysis on the yen pairs because I've said pretty much all I need to say. It's very much dependent on what the Bank of Japan does or does not do. If they don't do anything, then these things just keep going as far as I can see. One that's very interesting is euro versus the dollar. And I'll go to my analysis chart on euro versus the dollar. And here's why I'd be very, very reluctant to buy euro versus the dollar this week, and go back to what I said before on the dollar index, for instance. That week of selling on the US dollar, this is the dollar index, to my mind, will be met by that relief rally that I'd be looking for. So if that's going back that way, then the euro versus the dollar is going in the opposite direction. Whether that can be sustained or otherwise is entirely up to what the market does. And I'll be relying on candle patterns and resistance areas to tell me what that's going to be, or at resistance areas to tell me what that's going to be. But from a directional bias perspective, I'd be looking to trade this one short. Am I committed to that? No, I'd want to see something that makes sense in terms of a candle pattern or a false break of resistance or something like that. So bias is short, but I'll see how it all pans out. Next one is pound versus the yen. And again, not going to say too much about the yen pairs. It's very much a case of they'll just keep going if the Bank of Japan doesn't do anything. Pound versus the Kiwi. Don't mind this one either. That's next on the list. And that's giving us, again, game changer bar on the weekly chart. The interesting part about this one, that's the monthly, which is also forming a game changer bar. Interesting part about this one is it's come back below a resistance trade line, which is on a daily chart. And I'll show you that now. It's a bit messy, I've got to say, and I can probably improve that somehow, but I won't just now. Again, I'd like to see a relief buying rally of some kind, at least come back to the monthly pivot, maybe to the trade line, which is non-existent at the moment. Let me get rid of it. Like to see that happen and give us a lower high to back up the double top. Then I can look to trade this short. Would I be prepared to trade the weekly short? Answer no. Reason, if I look at this level here, which has been resistance, been a whole chunk of support through here, strong resistance here, strong support here, broken back below it, broken back above it, and now we're looking to trade back into it. So it's too close to me. Where am I going to put my stop? Would have to be up here. Where am I going to take some first profit? It'd have to be here. The reward to risk is ridiculous. That doesn't preclude me from going short this pair, but I would need to see price come back into this area here. What I'd be looking for in reality is probably a false break of this trade line. So if price were to come back here, fail to take out that double top, then sneak back underneath here and retest it, then I can go. But at the moment, trading into this level doesn't make any sense. I'd need to have profit in the bank before I hit that level if I was to trade this short. That is pound versus the Kiwi. The next one on the list, and we're nearly there, is US dollar versus the Canadian dollar. A mate of mine rang me on Thursday. I think it was Thursday. He said, what do you think of dollar CAD for a short? It was after this bar was formed. And of course, we had Canadian employment figures, I think it was, on Friday, on top of, and exactly the same time as the NFP announcement. And I said, look, don't mind the direction short term, but there's no way in the world I could trade this short underneath that bar there. He did, and he's got money in the bank this morning, but it was a high risk strategy as far as I was concerned. That's regardless of what's going on now, which is really interesting. The chart's really compelling because we do have on the weekly chart this triple top and now a massive key reversal bar. The same applies to what I said to my mate the other day. There's no way I can trade that bar. A few reasons. One is it's a one bar reversal, which I don't trade unless it's got context. And then I'm trading straight into the monthly pivot. Yes, the bias looks to be going short, but again, I go back to the dollar index, which I still consider to be at I won't call it a strong support level because it is just a medium-term market structure. It's not even a medium-term, short-term market structure. But I do expect this, as I said, to rally just a little bit. What I can do with that in mind, and if we do get that little rally and pardon me, and a lower high situation in here, then we can expect that to go short, which means that dollar CAD can absolutely go short and fill in this box range, which is now pretty clear, right? So I'm keen to trade this against my short-term bias for the dollar, but I need to see something concrete to back up that candle. You could trade it, absolutely, if you wanted to. but the reward to risk for the monthly pivot, which is your first support level, is pretty poor. So you're going to have to, in my opinion, put up with some drawdown before you actually get any money out of this. Or it goes back and takes out your stop loss, wherever that may be. So a little bit tricky, but I do like the fact that we've had 3 amigos sitting here. What's 3 amigos? Well, 3 amigos is actually false breaks of levels. False break up here, false break up here, false break up here under construction, as I call it. So lower high in here makes perfect sense. May even create a head and shoulders sitting there. So yes, I could certainly trade it, but I'd like to see price come back to here before I did that on dollar versus the CAD. Maybe that happens very quickly. Maybe it doesn't. We shall see. I don't anticipate that I'm going to be able to trade this short this week because I think it'll take some time to get back to that level. Next one on the list, there's only 2 to go. Dollar versus the Swissy. Dollar versus Swissy, very interesting. In one of my webinars last week with, where was that? It was in the Q&A. And Gary, one of my Q&A people, was having a good look at dollar versus the Swissy and pointed out what I really liked. I think I've got a dollar Swissy chart here. Yes, I do. I really like this. This made perfect sense to me. And we spoke about that bullish engulfing bar, which of course is a game changer bar in its own right the previous week. And we suggested that trading this from here to here would make perfect sense and getting some profit in the bank. Well, that's pretty much all it gave up, at least in the short term. Depends on if you trail the stock or not, whether you're going to be still in that trade. But I still like this from a, I'll have to call it short term now, I suppose, because the dollar does look to be under pressure. But when the dollar's under pressure and we've got things like war going on and all sorts of things around the world, then, we've been in a strong dollar environment, don't forget, for a long, long time. This could well be a long covering decline. But that candle's interesting, to say the least. One going one way the previous week, the next going the other this last week. Makes it interesting and pretty much not tradable from a game changer point of view. My personal bias, as I said, is for the dollar to go long, and versus the Swissy, that's going to be pretty tough to trade unless I get a false break of this support area here. So watching it, yes. It could also break out of resistance, but you can see that we're trapped now inside this little pennant formation. So I need to see something give, either from a false break of support or a break and retest of resistance on dollar versus the Swissy. But it is a game changer bar suggesting that we go short. Dollar versus the yen, like I said, I'm not terribly interested in trading yen pairs at the moment, but this does look very much like a double top is either under construction or is now constructed. I can say that it is because it's a 1-bar reversal, but it's a pretty good one at a pretty decent level. Monthly chart, again, as I pointed out from the get-go, that symmetry down here, and it was a yen pair as well. I can't remember which one, maybe Aussie yen or Euro yen. If that were to reverse, then this has got a long, long way to go. Just needs something out of the Bank of Japan to get it across the line. And that doesn't seem likely, I've got to say. Okay, so they're the game changer bars. Apart from euro versus the pound, pound versus the Kiwi, and to some extent dollar versus the CAD, which have given me a directional bias for the week, there are 2 others that aren't game changer bars that I'm quite keen on. CAD Swiss is one, and for the longest time I've been trying to get CAD Swiss long. And the reason is that we're in a very tight box range, have been for quite some time. And every time we come off the bottom of that, we seem to get a nice rally to the top. Every time we come off the top, we seem to get a nice sell-off to the bottom. And we've been able to take advantage of this. The last rally that we entered here and got out pretty much up here somewhere. This is a potential replay of that. And for that reason, I'm looking to trade this long. It's not a game changer bar, but it's very, very near there too. So it does give me a directional bias for the week. Twofold. One, it's, well, a morning star, call it what you want. And the other is that it's bouncing off the bottom of that range for not the first time. So I'd like to see a higher low in here on a smaller time frame. Nicely at resistance at the moment, that being the monthly pivot and formal resistance through here. So a nice little sell-off, maybe Monday, Tuesday, maybe even Wednesday. And by Thursday, we can look for a turnaround here and trade it long. If it continues to go, won't be happy because I'm not in and I'm not likely to get in. But if I do see that higher low, then most definitely I'll be looking to trade that. The last one I want you to look at, or that's certainly on my watch list, is Euro versus the CAD. Let me bring up a chart of Euro CAD. I don't think I've got one over here. No, I haven't. Euro CAD, reason being, weekly chart is showing me a potential for a false break of this, what really amounts to a descending triangle. I don't think you need to use too much imagination to see that happening. So there's the structure that I've got, and it's once again bouncing off the bottom to the top, lower high to the bottom, higher low to the top. What do I need to see to trade this? I need to see price on a smaller time frame come back underneath that line, which would need adjusting, of course. Have I got that already? Let me see. I've got to get my line in the right place, of course, which looks to be a little bit difficult. Let me go there. No, it's not going to work. We'll have to go there. Let me see what that looks like. Yeah, it doesn't look anywhere near as appealing as it did. This would. If price were to come below here, Monday would be good. Tuesday back to here to retest the monthly pivot and the trade line. Bingo, I've got myself an entry on Euro versus the CAD. And that would be just honky-dory because I could then trade it down to the bottom of the triangle, get some money in the bank, and anticipate that it could go through that level and win me some money. That would be happy days. So that's what I'm looking for in Euro versus CAD. Back underneath here, retest. Here's my, well, hang on, my profit level's not there. Yes, it is. That's where my profit level is. That's the bottom of that that descending triangle that I did point out. So that's where I'm at, guys. That is my outlook for the week. It's given me quite a few biases, and the best of them, in my humble opinion, are Euro versus the pound short. Pound versus the Kiwi depends, as does dollar versus the CAD, but dollar versus the CAD does look to be a sell with a nice little bull run to give us a lower high. CAD Swiss and Euro versus the CAD. I'm pretty keen on the CAD, aren't I? Didn't have real good news, but anyway, technically, that's where I'm at. Thank you, folks, for your attendance for this weekly Sunday market update. I don't see any questions, so I will bid you adieu and wish you a wonderful week ahead. I hope it's profitable, and I hope you stay safe and have a wonderful time. We'll catch you next time. Bye-bye for now.